podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. Despite a more cautious equity market, investor activity across the BRVM remained strong, selective, and disciplined. Volumes stayed high, bonds attracted renewed interest, and several stocks delivered standout performances. This type of market environment is not a sign of weakness. It is often where informed investors begin to position themselves more strategically. Let us break it all down clearly and calmly, and most importantly, explain what it means for you as an investor in Francophone West Africa. We begin with the big picture. Over the week from December 8 to December 12, 2025, BRVM equity indices declined, reflecting a more cautious market mood. The BRVM Composite Index fell to 347.81 points. The BRVM 30 Index also declined, closing at 166.65 points. The BRVM Prestige Index, which tracks the market's most liquid and high-quality companies, recorded the sharpest decline, ending the week at 143.30 points. What does this mean in simple terms? This does not signal panic. It signals profit-taking. After several weeks of gains in large-cap stocks, investors chose to lock in profits. This is a normal and healthy behavior in any mature market. Prices adjust, expectations reset, and capital rotates. Now here's a very important detail. While prices declined, trading volumes increased. A total of 3,467,996 shares were exchanged during the week. At the same time, the total value of transactions fell to 2.988 billion francs CFA. This combination tells us something critical. More shares changed hands, but at lower average prices. In practice, this means investors are still active, but they are committing capital more cautiously. They are spreading risk, adjusting exposure, and waiting for clearer signals before making larger bets. This is typical behavior during a consolidation phase. Let us now look at the most actively traded stocks. Sénégal Senegal once again dominated trading activity, accounting for just over 18% of total market turnover. Even though the stock price declined slightly, the level of trading confirms that Sonatel remains a core holding for both institutional and retail investors. When a stock remains heavily traded during a market pullback, it signals confidence, not weakness. Alongside Sonatel, sit AB Côte d'Ivoire and Africa Global Logistics. Côte d'Ivoire also recorded strong trading activity, reflecting continued investor interest in consumer-related and logistics-driven businesses across the region. Now let us turn to the top performers of the week, because this is often where early signals emerge. The strongest performance came from Air Liquide Côte d'Ivoire, whose share price rose sharply to 1,080 francs CFA. Why does this matter? This move is not random. It reflects renewed investor confidence in the chemical and industrial sector, which has benefited from stable demand and improved margin visibility. When investors rotate into companies like this, it often indicates a search for defensive earnings combined with long-term growth potential. Another notable gainer was Cervere Abidjan Côte d'Ivoire, which advanced to 2,150 francs CFA. In this case, the market responded positively to commercial strategy. Pricing adjustments and stronger demand in air transport services helped improve revenue expectations. For investors, this shows how operational decisions can translate quickly into stock market valuation. Secor Côte d'Ivoire also posted gains, supported by favorable conditions in the agro-industrial sector. This sector continues to benefit from regional demand and local value-added transformation, both of which are long-term structural trends in West African economies. On the other side of the market, several large-cap stocks weighed on index performance. Companies such as CFAO Côte d'Ivoire and Cetao Côte d'Ivoire saw their prices decline significantly during the week. It is important to understand the context here. These declines were largely driven by profit-taking. Following extended periods of strong performance, a pullback after a rally does not automatically mean the fundamentals have deteriorated. Often, it reflects short-term repositioning rather than long-term pessimism. Now, let us focus on one of the most important developments of the week: the bond market. Bond market activity increased sharply. Total transaction value rose to 5.133 billion francs CFA, compared with approximately 3.807 billion francs CFA the previous week. What does this tell us? It shows that investors are rebalancing toward lower-risk assets. When equity markets become more volatile, bonds often attract capital because they provide predictable income and capital preservation. The most actively traded bond was the TPCI 5.75% 10-year, which accounted for more than 62% of total bond trading volume. This level of concentration is significant. A high turnover rate indicates strong liquidity and sustained institutional demand. Investors are clearly comfortable holding longer-term government-linked securities that offer competitive yields. For newer investors, let us simplify this. Buying a bond is similar to lending money to a government or institution in exchange for regular interest payments. When bond trading increases, it means investors are prioritizing stability and income, especially during periods of equity market uncertainty. The message from the bond market is clear. Capital is not leaving the market. It is repositioning. So what should investors watch next? Looking ahead to the week of December 15th to December 19th, market data points to selective opportunities across both equities and bonds. Valuation gaps are emerging in some segments, while yield opportunities remain attractive in fixed income. However, these opportunities require discipline, data, and timing. Understanding sector cycles, managing risk, and knowing where institutional flows are moving makes a meaningful difference. This is exactly where informed analysis becomes essential. With Daba Pro, investors gain access to in-depth market analysis, structured recommendations, and tools designed to help anticipate trends rather than react to headlines. With Daba Pro, you are not simply following the market, you are positioning ahead of it. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.